Hi, everybody, and welcome to the Middle Class Investor this week. It is July 14th. It's about 4:20 or so on Saturday, and I'm looking at the S&P 500 here, and kind of got some wave labels drawn on here just to kind of give you an idea of where we are. And this has been a huge, counter trend rally. In fact, let me go to a daily chart and let's just look at how long this counter trend rally was. First of all, the trend down lasted. Let's just do some statistics here. It was 340 points down on the S&P 500, or about almost 12%, and it took 14 days. Okay. Now the counter trend up. Counter trend up, let's subtract this one last day, but so far it's been 272 points up, and it's lasted almost 154 days. Well, let's subtract 153 days. Now that is extraordinary, and it just goes to show you how hard it is for a bear market, a bull market to end, especially one that's lasted for 10 years, almost 10 years now. So we started back here on March 9th, way back here, and it's rallied all the way up, and here we are here almost halfway through 2018, more than halfway through 2018. You can see this big trend line here. Of course, once we break, it looks like we'll break the blue trend line first, which you can see here. We've tested it, rallied, and now we're bouncing off of it again. But once it breaks this blue trend line, it will all be over. And certainly this has lasted a lot longer than many of us thought it would. I thought it was going to be over here in 2016. So it just goes to show you how hard it is to talk about where the market's going. But what is unmistakably clear, and I think this is the most important part. This is the reason I kind of started this whole YouTube channel, is this trend that started back here at the end of in 1932 is 5 waves. So we got wave 1 up, 2, this whole thing is 3, all the way to the 2000 top. From 2000 to 2016 was just a big, 2009, that whole 9 years was just a big wave 4, and then this has all been wave 5. So what we know happens after wave 5 is that the 4th wave is retested. The 4th wave low is right here. I could show you this over and over again on different time scales. Now, to be 100% truthful, I have not yet seen it happen on this level of scale. And to be frank, nobody else has either, except the people that were living back here. This move right here in 1929 to 1932 was similar to what we're likely to have. Just a different, the high here was, what is that, 32. I'm looking at the S&P 500, and the low was 4.32. So the difference is the numbers are going to be different, but the scale of the sell-off be about 90% or so. In fact, if we zoom in on this, let's just look. Let me clear some of this stuff off. Don't need all this stuff on here. Let's just clear some of this off, and let's just look at what kind of sell-off. Let me go back to it. Well, I got to have a 10-year. Let's just go back and see. Sorry about that. Let me go to a 20-year, and let's look at daily. And let's just see how far back this goes. So I'm going to try to click on the high there. I don't know if I'll be able to click on the high there or not, but let's say the high is right about there. So from there to say there is well, that's only 1,000 points. Oh, I didn't go back to the 2009 low. What we really want to go back to is the 2009 low, because that's the fourth wave low that we just discussed. So let me get that into the picture here. Here it is right here. Okay, so I'm going to try to click on the high here, which is very hard to see. I'm not sure where the high is here, but it's somewhere in here. And I'm going to come back down to this area here below the fourth wave low, and that is minus 80%, and that's really just to the fourth wave low, or the fourth wave low, the 2009 low. That's about 2,200 points. Let's see if we go to here. Yeah, the problem is it doesn't fit on the screen. So, but you know, we're talking about a significant sell-off. Let me put all back on here and see if I can. I don't know if I can grab it. That's the problem, is I can't really grab enough of the trend here because it's so big. Let's go from here to about here. That's 2,300 points. And about 82% back to this point here. So this is an extraordinary. It's going to be an extraordinary time in the market, and you know, it's the kind of move that, you know, could literally destroy a whole generation's worth of capital. So we just want to be careful. Want to be aware of it. I think the Elliott wave people are pretty good at determining where we are in the trend. They have all kinds of different methods that they use, but the first stop, you know, once we you know, if we're looking, let's go back to a 5-year. If we're looking for where we're going to go first, Seth, well, we're going to go to the first fourth wave low, which is the 2016 low. So if we click on this and see how far that is, if I can get on it there. So the first move we should expect to see, again with like a wave 3, 4, and 5, is about a 40% sell-off. So these are the kind of you know, nobody wants to see a 40% sell-off, and this should happen relatively quickly, probably in 4 or 5 months once it gets going. So so in about the time span that this has been going sideways, you can expect this to all be loss from here down to where this 3 is. So be very, very, very careful. I can't caution you enough. You know, for those of you that have missed out on some of the upside, you know, and you've been listening to me, you know, I apologize that you've been missing out on the upside, but the potential downside here is so dramatic and so significant that I think I don't even think it's worth capturing whatever upside there is to capture. And I covered that way back in here. I basically said, you know, hey, even if it goes up 3, 4, 5% here, the risk you're taking for the downside is many, many more times that. In this case, 8 times that. So, but you can kind of see here where you know, this looks like a first move down. This looks like a correction back up. It's very correct. Counter trend moves are very overlappy like this. Okay. Let me see if I can show you. If I can get out of this. Okay, let me see if I can show you something that looks more let's go to something shorter term, and I'll show you kind of how this looks when you're day trading. So again, the theory is that no matter what time scale you're on, the market moves in these waves. Okay, so if we were looking at this right now, for example, you can see this looks like an ABC. Okay, so you would go back to the previous swing high, which is right here. Here's the previous swing high, and we would make a DP off of this previous swing high, and this is where we'd expect the market to come back to. Of course, it came back to that point. Okay, so then what you do is you go to 5 time frames lower, which in this case would be a 3-minute chart. And what we would want to do is look for trade setups off of that DP support. I don't know if you can see that here, but a really strong VS came in here. There's actually 2 opportunities to get into this trade right here. The first one's right here, which is pretty aggressive, but it's a good trade. The second one is, here we've had a move off the bottom, and then we've got something that looks like an ABC on the pullback. So if you kind of click on this and you say, well, what is this pattern right here, and you click on it, you can see that what it does is it puts up an ABC for you. And then, of course, the market took off and rallied, to a significant upside. So this whole move here, this would be wave 1, this would be 2, this would be 3, and 4, and then 5. So we've had 5 waves. Now that doesn't mean it couldn't go a little higher. It could pull back a little bit and go a little higher in another 4 or 5. If it pulls back, it's probably going to pull back into this 2797 area and then rally back up over 2800. But not much. I mean, because it's already gone 5 waves, so it could drop from right here and be fine. Now, if I go back out, let me try to guess. Excuse me. Yeah, see, it's not really showing up very well. There's a lot of, this is a day trading chart, so there's a lot of stuff on here, and when you zoom out, it makes it kind of cluttered. But if we look at, say, a 30-minute, yeah, you can see kind of the 1, 2, 3, 4, 5. You can see it easier. Well, yeah, you actually may not be able to. Let me kind of sketch it out here. I can't fit the whole thing on the screen. That's a problem. Let's shrink it down a little bit and then see if I can fit the whole thing on the screen. Yeah, pretty much. That looks good. Whoops. Boy, that's sensitive. Okay, let's stop there. Okay, so you can see kind of, 1 here, 2 here, where this is all 3, 4, 5. So what I want to point out to you, I mean, this pattern. Now, granted, this is, remember, this is a 15-minute chart. So this pattern, though, it shows up over and over again. And if we go back, let's go back real quick to the all data on the S&P 500. Do you see the same thing here? Here's 1, here's 2, here's 3. See, 3 goes all the way up there. Here's 4. And then this last move up would be 5. So this is the same. This is, this pattern happens at all degrees of trend. That's the theory. And I don't know. I don't know what makes it happen exactly. Robert Prechter says social mood. Okay, but I mean, I don't know what the exact. I mean, social mood is a very ambiguous kind of answer. So I don't know exactly what causes this to happen. But it does happen, and it happens. I just showed you one trend that started in 1932, and then I showed you another one right here. There's 1, 2, 3, 4, 5 that started on June 28th and is either ended on Friday or will be ending soon. Maybe might get up into this line here. This line, I think, let me see what go to another ES chart, one that's, see what the high was. Oh, the high is way up there. But I think this line here, I'm trying to remember why I put that line on there. I think there was a gap that's filled or something at that line. Oh, it's the high that goes to here. But I don't know that we're going to get to that line. It looks to me like this is, making out a flat. And again, you can see kind of a 1, 2, 3, 4, 5. So we're pretty much done. If you look at this DP setup, let's look at the trade setup. It should come back here to the 4th wave low. which is where the target is right here. It's a 3-to-1 trade. So, you know, just any time now, we could start seeing this market sell off. So it looked like last week it was going to start doing it, and it didn't. So, but that's just, you know, that's the way the ball bounces, so to speak. But I want you to know there's a lot of risk in this market right now, and it's not something to be trifled with. In the same way that this dropped 12% in 14 days and it caught everybody off guard, this is going to drop 40% in about 3 or 4 times the time, so maybe in a month and a half or 2 months, and is really going to catch people off guard. So just be very, very careful. It's your money, you get to decide, but it's just very tricky time. Okay, so again, let's just recap the week here. The market was up this week. You can see here, big white candle, 2 big white candles in a row, basically erased this little 3 weeks down. But soon, either sometime next week or maybe the following week, we should see some pretty sharp selling and some movement to the downside. All right, let's look at some of these other charts just real quick. Let's look at the volatility index. As you might expect, volatility was down. Zoom in here so you can see. Volatility was down this week, which makes sense. Remember, we just talked about 3 up candles, or these were 3 down candles in the market, which correspond to 3 up candles in the volatility index. And then the last 2 weeks have been up in the market, so you would expect volatility to be down. The reason you look at volatility is sometimes the market will be up. So let's say the market's been up, but then volatility starts going up. So that's called a divergence. And divergences can show up in all kinds of different places in the market. But sometimes it can give you a key, a clue at key junctures on where the market's likely to go. And that's why we look at things like volatility in conjunction with where the market is. All right, let's look at the 10-year yield. The 10-year yield looks like it needs to pull back some more. And again, like I said last week, a pullback here could correspond with a sell-off in the market. So as the market sells off, money flows into bonds. As money flows into bonds, yields drop. But they shouldn't drop too much farther than this 2.6% area. Okay? All right. Let's look at the 13-week Treasury. The 13-week Treasury, again, we're still, let me take it off log, or put it on log rather. We got this old trend line here. We kind of broke it, and we drew a new one that's kind of follows this price action here. I'm going to draw another one. I'm going to start from here, but I'm going to capture this price action here. Okay, so it could be that, as the pullback happens, we're getting some deceleration. In fact, let's move that a little bit. Let's give it a little bit more room, because we might see this go for a little bit longer. I'm going to leave it right there, and then you can see it accelerate again. So, all right, the Dow. The interesting thing about the market right now is the Dow has been weaker than the Nasdaq and the Russell. But let's look at the Nasdaq real quick. I got a Nasdaq chart here. Notice that this looks like a 4 and a 5, 4 and then 5, and we're at DP resistance. Okay, off of this previous swing into this high here. So we're at DP resistance. The strength indicator is inside the band and looks like it could start curling over. The Russell, I don't think I have I can put up a longer chart on the Russell, but it looks like the Nasdaq kind of. I can get it zoomed. Nah, it doesn't really look like the Nasdaq. It looks like the Russell could go a little higher. Let's put it on daily. I just don't have enough data there to. So you might see the Russell, go a little higher into this DP, or that could be it for the Russell. It's hard to say, but this looks to me like it could make some highs up into here. And there's been a flight. What's interesting is it looks like there's people leaving the Dow. And I don't know if it's this trade stuff that's causing these multinationals to be a little softer, but they're definitely softer. And I just think I think this is going to cause people to lose even more money, because once the elevator goes down, it goes down faster in the NASDAQ and the Russell, and people might not be prepared for that. Let's look at the Russell on this chart. Yeah, see, Russell might make a slightly higher high before it comes down. It's certainly possible, but this looks like a 4 here, this triangle. I mean, this could have been let's say a 1, ABC 2, where this is all 3, 4 into a triangle, and 5. So it could be just about done. In fact, if we look at, let me change this, because sometimes I drew this a while back, and sometimes you can redraw it, and you come off the wave 2 low, and you capture the wave 4 low on the chart, and then go to the wave 3 high, which is right there. Notice we're at trendline resistance. So this is how Elliott draws a channel. You come off the wave 2 low, which is here, and connect it to the wave 4 low, and then extend up to the wave 3 high and extrapolate it out of the future. And you can see we're at trendline. I mean, it's possible we could have a throw over in the Russell, in which it would come back down and then sell off. But again, how much more upside do you have here in the Russell? We're at the trendline top on a weekly basis, and you got all this potential downside down here to 1550 or so. So I just don't think certainly the reward to risk is not there. All right, so look at some of these other countries. Germany, there's a lot of stuff going on with these other countries. This looks kind of ABC-ish, but who knows? It could be a 1-2-1-2. We'll just have to wait and see. But you would need to zoom in and really do some analysis on there to try to get a better idea of what that is. Japan, kind of exceeded our first pivot. This was our first pivot area right here off of this high, this blue box. We had to go back further to get a new pivot. It kind of went into this new area and then stopped going up. So that's about right. Here's the United Kingdom. We had a DP off this pivot. Again, it went through that, so we went back to the previous high, took a DP off this pivot, and that one seemed to stop the market. Let's look at our toss charts real quick and look at a couple of markets. Let's look at gold. I mean, this gold and silver stuff is really tough business. I just haven't had much luck in really determining what's going on here, which tells me this is some sort of corrective something or another that you just can't see it. I can't see it. So, but I drew this last week. I put this 1227 area in. It seems to be holding. It was a pivot. It was a price area below this pivot low here. Seems to be holding. It looks like it could maybe go a little lower. And then, I would expect a bounce. It could bounce here. Maybe this is some sort of, 5-wave move here. It could bounce in a 4 and then come down to this area. But, if you can buy gold right around here in this 1227 area, I think that's probably a pretty good place. But you might want to see a couple of weeks of bullishness before you actually dive into that. Silver, silver's kind of hanging around. It's still in this triangle pattern. I'd say as long as it stays in this pattern, then I would look for some place in here to buy silver to the bullish side. It's going to be bullish for months, I think. For at least as long as this was. What is this? This is 2017. A year and a half. So I would look for this to go up for about a year once it gets out of this formation here. On oil, oil's another one that's just got me kind of bumfuzzled. But it does look like it's finally, you know, this last week here could stop the bulls. But, you know, really what I want to see is oil come down to this pivot low and then some sort of counter trend looking retrace. And then we can say, you know, oil's done. Again, let's go back just real quick and look at, you know, the ES. The ES is at DP support. Where did I? Is that not the chart I had up earlier? Let me look. I may have had a different one. I've got several ES charts. That must be it, but it doesn't look like. I thought I took a weekly. No. Oh, this is an extended trading hours chart. Well, here I can take a daily. So do a DP off of this, and you can see we're at DP support, or DP resistance rather. And then if you look at, we already looked at the NASDAQ. The NASDAQ is at DP resistance. Oh, I know what I haven't looked at, the euro. So this is what it looks like the euro is doing to me. 1, 2, 3, 4. This whole triangle thing looks like a 4, and then we should see 5 and another wave lower. So let's just take a DP off of this. So you should see the euro come down into this area here, this 1.143 area. And I'm actually, just full disclosure, I'm actually short the euro. So it could come, you know, what I'd really like to see happen in the euro, let me zoom in on a daily. What I'd really like to see happen in the euro, and it hasn't happened, this leg really didn't come down here low enough, because what this likely is an A, B, C, D, where D would come to about this trend line. And you can see it's pretty shallow here. So I don't know if, I mean, D could be done, or maybe D's going to turn around and, you know, maybe it's not complete yet, and it's going to turn around and come into this area. Does everybody see what I'm talking about? I don't know if you can see what I'm talking about here. If this could be A. This is how triangles sometimes unfold. This B, okay, C, and then D you would expect to be, you know, down here somewhere. It would actually make its way all the way down here, like so. And then you would get an E, okay, so E, and E won't touch the other side, it never does. And then you get a 5-wave move down in here into the DP. So I'm actually short the euro back up here somewhere, and so I'm in the money, but this has got me a little concerned because, I mean, this could just keep going out. You know, maybe this isn't a triangle. So I'm going to let it go a little bit longer, and then, you know, if it starts making higher highs, higher lows, I'm probably sell out of that position. But what I'd really like to see is for the euro to pull back down toward this trend line, get out of my position, let it rally a little bit, get back in somewhere up in here, and then take this whole 5-wave move down. That's really what I'd like to do in the euro. Of course, you can do a similar, you can do, let me go over to here. In the British pound, you can do the same thing. The British pound kind of looks the same, except maybe this isn't a triangle. Maybe this is just maybe we're going to have an ABC here. ABC, so maybe, you know, what I would do is I would look to be short the euro if it can get up. How come it's not making my DP there? If it can get back up into here, I would be maybe short the euro down this way, down to a DP off of this low. My DPs are not coming in very well here. There we go. So maybe the British pound, you know, into this area here around 1.3. So that's kind of what I'd like to see, or that's kind of what I would, if the British pound gets up into here, I might short it down into this area here. But I like the euro better. I mean, I'm in the euro, so you know, I pretty much have to like it because I'm in it. But some of you may be more interested in the British pound, especially since Brexit's going on and that kind of thing. All right, I think that is about it for this week's Middle Class Investor. I don't really have anything else to discuss, so why don't we end it there? If you've got any comments, put them in. Put them in the. Here, let's go to the page real quick and just pull it up, and let's put it on YouTube. I don't know what's taking so long. My internet is very slow, I guess. But here's the channel. If I can get it to come up. Ah, man, slow. Sorry about that. These are what the screens look like. So, watch the video, make some comments, and we'll go from there. All right. Thanks everybody for coming in. We'll see you next week. Bye-bye.